All right, that's done. I would like to introduce the speaker of today, who is the co-founder of CoinGecko. The speaker is Bobby Ong, who will be speaking on the topic, new money, cryptocurrency trends, challenges, and opportunities. A round of applause as he comes to stage, please.
Hi, good morning everybody. It's a big crowd, I didn't expect this big. I guess everyone's excited about the cryptocurrencies. So yeah, today I'll be talking about new form of money, which is cryptocurrency. I'll be talking about the trends, challenges, and opportunities. So a bit about myself. My name is Bobby. I did economics in University College London. Graduated in year 2012. Got into the Bitcoin scene somewhere in the mid-2013. Got my first Bitcoin. Wasn't easy to buy Bitcoin back then. Started CoinGecko in April 2014. And after that, I wrote a couple of chapters in 2 books. First is the Handbook of Digital Currency, published in April 2015. And this book just published in September 2017, Handbook of Blockchain, Digital Finance, and Inclusion. So I wrote 2 chapters in it with a few other authors. So what do we do? CoinGecko is a cryptocurrency data platform. We basically collect data on anything that is related to cryptocurrency, such as the price, the trading volume, the market capitalization, data and statistics around the community of a coin, data and statistics around the development of a coin, and so on. So we are the 3rd largest cryptocurrency data website in the world, and we do about 13 million monthly page views. So yeah, that's us from. So just a quick check on the audience. Roughly, who here owns Bitcoin, Ether, and cryptocurrencies and other cryptocurrencies? All right, let me have a scan. All right, so it's a fairly new audience here. But starting from basic, all right, good thing. I prepared like some of the basic information on Bitcoin and cryptocurrencies and some 101 stuff, but I'll skim them through pretty quickly because I will cover, I'm sure you have heard a lot of things like Bitcoin Cash, Ethereum, Ethereum Classic, forks, splits, mining, blah, blah, blah. And some of you might be confused. So I think from this 1 hour, 45 minutes, 1 hour talk, you'll get a good overview of what are the major things. And after this talk, you can get my slides and do more research by yourself online. So I'm not so sure if the organizer will pass the slides, but I will upload this somewhere and then you can get it on my Twitter later on at Bobby Ong. So Bitcoin and Blockchain 101. So what is Bitcoin and why is it special? Bitcoin is the first decentralized digital currency that does not have any central authority. It is a peer-to-peer payment system where users can send money to each other without the need of a central party. Essentially, we can think of it as a PayPal or Maybank to you, where you can send money from user A to user B, but you don't need any central clearinghouse to allow you to send it. So it's a peer. It's like me giving you money, but in an online world. So it was invented by an anonymous programmer or an anonymous group of programmers named Satoshi Nakamoto. He has a Japanese name, but we don't know if it's Japanese. He might be a lady or it could be a group of girls writing it, we don't know. The concept was first described in October 2008 in a white paper that was published online. Satoshi Nakamoto soon, this was in the white paper, it was a lot of mention. This white paper was created right after the financial crisis, the global financial crisis of 2008. And in 2009, Satoshi released an open source software containing the Bitcoin code. And in January 2009, that's when Bitcoin first started. So the monetary supply of Bitcoin has been set by Satoshi himself. He just said there will be 21 million Bitcoins that will ever be created. Why 21 million? It's just a number that he just plucked from thin air. It doesn't really matter. What matters most is that the supply is fixed. So as compared to fiat currency like the US dollar or the ringgit or the pound or the euro, where the central banks can increase the monetary supply at any point in time, in Bitcoin, The supply is fixed at 21 million Bitcoins. So the way that these Bitcoins are released to the economy is via the miners. So this is a chart. This is time. This is the number of Bitcoins. This is a 21 million Bitcoin cap. And this 21 million Bitcoin cap will be reached in year 2140. So the way that these coins are released is via the miners. So every block that the miners find in the first 4 years, the first 210,000 blocks, every block that is mined, which is roughly once every 10 minutes, will be rewarded with 50 Bitcoins. So Bitcoin was released in January 2009. So we are now 8-point-something years in the space. So the first 4 years, 50 Bitcoins is released every roughly 10 minutes. The next 4 years, 25 Bitcoin is released every block or every 10 minutes. And now we are in a third phase where Bitcoins are created, 12.5 Bitcoins are created once every 10 minutes or so. In the next 4 years, it will reduce by 6.25, 3.125, and so on until we hit 0.0008 decimal places. This is called 1 Satoshi, basically. So Bitcoins are divisible to 8 decimal places. So 1 to 0.000000001 Bitcoin. That's what's going to happen in year 2140. The miners will only get this much. So if you're wondering how many Bitcoins have been circulated in the market so far, we have roughly 16.6 million Bitcoins, which is roughly 79% of all Bitcoins that have been mined, that can be mined, have already been mined. So a lot of people are not aware of this, 79%. What this means is that the inflation rate is very high at the start because Bitcoin just increases a lot at the early days. But at this point in time, the inflation rate is about 4%. Oops. So I'm sure you have heard a lot of this thing about blockchain and what makes blockchain special and all. So blockchain is basically just a general ledger, a general public ledger that that records all the transactions in the Bitcoin economy and tells you how much Bitcoin is owned by which account at any one point in time. So it's literally a chain of blocks. This is a block, a block, a block, and it's all chained together because each block references the previous block. So in the blockchain, you can tell at this point in time, say block number 572, we can tell which account has how many balance. So Bitcoin account number balances are usually denominated in a bunch of random characters that usually start with 1 or 3. So this is like account. Let's just call this Alice. We can tell at this point in time, Alice has 5 Bitcoin, Bob has 0.8, Charmaine has 12.5, and so on. And we can tell the account balances at this point, at any point in time. And each block basically records a series of transactions that happen in the economy for the past 10 minutes or so. What this says is that account A sending money to account B for 5 Bitcoin. Charmaine sending to Dennis 2.5 Bitcoin and so on. And the way that the blocks are mined, are created, are added to the blockchain is via the miners. Miners basically takes all these transactions that are going to happen in the economy, put them up together, and then the job of a miner basically is to verify transactions. So if I want to send Bitcoin to you, the miner has to check, like, first, do I have this Bitcoin to send to you? And the second is, do I have the rights to spend this Bitcoin to you? So only after they verify that these transactions are legit, it is added to the block. But mining is essentially a lottery. There's all these miners in the world that are competing to find this block, because who doesn't want to find a block? At this point in time, every block that you find, which is roughly every 10 minutes, you get 12.5 Bitcoins, which is a lot of money. So what they need to do is they need to solve a cryptographic hash puzzle, which is basically a mathematical formula to crack the code. So it's a SHA-256 function that essentially has roughly 3 things. It's a function of the previous block plus all the transactions that is going to happen in the economy. And then what the miners need to do is they need to solve this puzzle to find out what is this question mark. And they need to get the answer, which is a bunch of random characters that starts with, for example, 5 zeros. So it's a random function. Nobody knows what comes out, but you need the answer that starts, in this case, 3 zeros. So the miners will essentially start like, okay, let's brute force number 1. Okay, it gets like 3AB12. Okay, that's not the right answer. Let's try number 2. All right, again, it's not 0, 0, 0. So it keeps on trying on repeat, loop, 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 until it finds the answer to this thing. So mining is sort of like Sudoku. It is very difficult to solve it, but once you have the solution to Sudoku, it's very easy to verify that this is the right answer. Because once I tell you, if the solution is 573, you can just plug in the answer and you can get, oh yeah, it's verified. But what is it? You don't know. It's very hard. So the process of doing this work is called proof of work. All right, so that's the 101 on Bitcoin. I'm just going to go right now on some of the statistics because we are talking about the trends in the cryptocurrency space. So this is the price chart of Bitcoin. So usually in Bitcoin meetups, there's not a lot of people when the price is low, but I guess because the price is high, like there's a lot of people in the room today. So I didn't take from beginning, but I just took a screenshot from July 2013 or so, and this is in US dollars. So as you can see, the price basically went up all the way pretty much from late 2016 and early and 2017 onwards. One of the big events that happened in the Bitcoin world is the Mt. Gox closure in February 2014. So Mt. Gox is a Bitcoin exchange based in Japan. This was the big round up. Bitcoin went from about $100 or so, and it went all the way up to $1,000 in 2014. And then Mt. Gox was declared a bankrupt company. Yeah, essentially they got hacked like a few years ago, but it was covered up and it was bankrupt, and then the price started going down. So it just went all the way down in 2014, 2015. And if you can see, I actually plot in a lot of things here. Bitstamp getting hacked, Bitfinex getting hacked. I just want you all to know, like, because there's a lot of beginners here, like in this space, hackers love Bitcoins because it's very, because transactions in the Bitcoin economy are non-reversible, meaning once I get hold of your Bitcoins, I can send it out somewhere else, and there's no one else who can reverse these transactions. Unlike credit card transactions, say if you lose your credit card and someone goes out and like buys like a new iPhone from it, you can just call your bank and say like, look, I lost my credit card. Can you reverse the transaction? And that's consumer protection. But in Bitcoin world, once you lose your Bitcoin or once someone has access to it, it's gone forever. So it's a big target for hackers. There's a bunch of other things that here I don't think I want to talk so much, but big one, China banned ICO here, and Bitcoin Cash split. So this one, Bitcoin Cash, actually caused the price to go all the way up to $5,000 once this was successfully implemented. I want to share with you this chart on the number of confirmed transactions per day. So back in the early days, there wasn't any transaction in the Bitcoin economy, but it has gone up tremendously up to lately. You can see right here, there was a huge drop in transactions. This was probably explained because of the Bitcoin Cash split. And there was a lot of uncertainty in the economy on what's going to happen with Bitcoin Cash. So a lot of exchanges and players and stakeholders in the system, in the ecosystem, were saying like, we are not going to have any transactions for the next 24 hours or so. This is the Bitcoin hash rate distribution table, pie chart. So one of the keywords or the specialty about Bitcoin is that it's a decentralized system, meaning no one party controls the system. This chart basically shows who are the major mining pools in the Bitcoin network. At this point in time, it's pretty decentralized. Npool has about 17%, BTC.com has 13.5%, and so on. When you choose to mine Bitcoin, there are two ways where you can mine Bitcoin. You can either mine solo, where you can put all your hashing power and try to mine Bitcoin yourself, or you can join a mining pool, where a mining pool is essentially a pool where everyone pool their resources together and combine their resources to try to win the Bitcoin block. Because it's essentially a race, so you are trying to compete against other mining pools out there to win. Mining pools mean that your chances of winning a block, because there can only be one winner for Bitcoin block at any one point in time, means if you pool your resources together, you have an increased amount of hashing power. So the chances of you winning is higher, because essentially mining is sort of like you have to brute force a solution. So if you have more people pulling resources together, your chances of winning will be higher. And when your chances of winning are higher, the rewards that you get, your rewards will be more spread out, more even across a period of time. Whereas if you mine solo, the chances of you winning will be low. So you might win one block today, and for you to win another block, you might have to take like 2 weeks or 3 weeks before you win another block of 12.5 Bitcoin. So that's why a lot of people choose to join a mining pool, because the resources are put together and the profits are more even out across time. So we'll see that at this point in time it's pretty decentralized. But it wasn't always this case. At one point in time in July 2014 or so, we had this case where this one mining pool named ghash.io almost controlled 42% of the network. We do not want any one party to control 51% of the network, because whenever a party controls 51% of the Bitcoin hashing power, this party can wreak havoc on the network. Essentially what it does is that if you control 51% of the network, you can rewrite the blockchain, and it's no longer immutable. You can approve invalid transactions or remove valid transactions from the blockchain, and that's not good. So it's very important for Bitcoin to be decentralized. All right, so besides Bitcoin, there are many other cryptocurrencies in the market. So let's play a guessing game right here and right now. Why don't you guess like how many alternative cryptocurrencies are there in the market at this point in time? Take a wild guess. 1,000. Who else? 500? 10,000? 100,000? So the person who said 1,000 is actually quite correct. We have, at this point in time, about 1,128 active cryptocurrencies, of which 871 are altcoins, which runs on their own blockchain, and about 200 plus or so are tokens, which runs on Ethereum and all the others. So a decentralized blockchain. The market capitalization is about $137 billion. So if you sum up all the market cap of all these coins, it's about $137. And every day, there are about $3 billion worth of coins being traded worldwide. And it's a 24/7 market. You can trade this any time of the day. I'll go through some of these early altcoins that have been created. So this got me really interested in the space, because Bitcoin is interesting, but I found out later on that there's a lot of other things that you can do with the underlying blockchain technology. So the first altcoin that was created was Namecoin. Namecoin was created in April 2011. Essentially what it does is a decentralized, censorship-resistant domain name system. So we have .com. So DNS system basically maps like your www.google.com to a physical server addresses and all. And governments worldwide can use censorship just by removing this entry from the dictionary of DNS system. So one of the ways that you can censor website is that if you have like a contact list of all the websites, google.com leads to, for example, 23.15.17.23 IP address, for example. The government just removes this entry from the dictionary, and then it's no longer found. So Namecoin tries to fix that by creating .bit domain name system. So it was a very and because the blockchain is replicated on every computer in the world, nobody could really take it down anymore, because this dictionary or this DNS system is replicated worldwide. One of the other interesting innovation that was done with Namecoin was that it was merge mined with Bitcoin. So I mentioned earlier that Bitcoin is open source software, right? It's available on GitHub. You can just take a look and read the open source software. Any developers worldwide can take a look at the Bitcoin software, modify it, and launch their own cryptocurrency. And that's essentially what happened, and that's how we got like to 1,000 over cryptocurrencies. So you need to have the miners backing it. If there's no miners and any one party controls 51% of the hash rate, then you are doomed, because they can invalidate it. So you can launch a coin, but you need to back it up with mining power support. So this is what essentially Charlie Lee did with Litecoin. So Bitcoin has 21 million Bitcoins. Charlie just multiplied that by 4 to 84 million Bitcoins. And so Bitcoin has a 10-minute block time. So blocks are created every 10 minutes. Charlie just say, let's do it by half to 2.5 Bitcoin, not by half, by 4 to 2.5 minutes. And instead of halving the Bitcoin rewards every 210,000 blocks, Charlie said, let's halve the rewards every 840,000 blocks. So multiply that by 4. And Charlie Lee, who was previously an engineer with Coinbase, the reason he launched Litecoin was because Bitcoin was getting, to mine Bitcoin, you sort of need specialized equipment. So the average Joe, average guy can't really mine Bitcoin. The chart that I showed you earlier, it looks pretty decentralized with 5, 6 major players, but what it means actually is there are only like 10 major players in the world who are actually controlling Bitcoin at this point in time. And Charlie basically want it to be more decentralized. So he changed the hashing algorithm for Litecoin from SHA-256 to Script. The hashing algorithm is that algorithm that miners have to solve and all. So Script is more memory intensive, and therefore you can use, it's more likely that individual owners can use their graphics card and mine this at home. So one of the next interesting coin is Ripple. Ripple is basically a remittance network, a real-time gross settlement system. Was released in 2012 and uses the consensus protocol. And it has partnerships with a lot of banks worldwide. And finally, there's a lot of talks about anonymous cryptocurrency. So if any of you think that Bitcoin is anonymous, it's actually not anonymous, it's pseudonymous. So there's a group of guys trying to work on anonymous cryptocurrencies. Dash is one of the 3 or 4 major anonymous cryptocurrencies, the others being Monero, Zcash. So it's previously known as Dogecoin, and there's this private send which is used as CoinJoin. So basically, instead of sending money from person A to person B, there's master nodes in Dash where everyone pulls their money together, and the master node tumbles and mixes all the coins and sends it out to different parties. So you cannot see the history of the coins anymore. So for example, if you want to send, and you have to send it in multiples of 0.01, 0.1, and so. So if you want to send like 12 Dash, you don't send like 12, you send 10, 1, and 1. And you send it to a master node. There's a few master nodes in the world. And then this guy takes all the other transactions together, mixes them together, and sends them out again. So there's a lot of innovation going around in the altcoin space. Some of the early experiments was with total supply of coins, distribution of coins, transaction time, hashing algorithm. This you saw it with Litecoin. Change the supply from 21 million to 84 million and so on. Changing from SHA-256 to Script, changing from 10 minutes to 2.5 minutes. Because a lot of people think at that point in time that 10 minutes is too long for transactions to be confirmed, and people want to experiment and see like, how fast can we make the transactions go? Can we go it with 10 seconds, for example? And there's a lot of coins that were launched to test this out. Because Bitcoin is quite big as a network, so all these coins can be launched as a testing ground, because if it fails, who cares? It's a small amount of market cap anyways. So Litecoin is essentially like a testing ground for Bitcoin network, and there's a lot of other things that are being tested on Litecoin network now that if it works well, will be ported to the Bitcoin network later on. One of the interesting things that came out of this innovation is this proof of stake. Proof of stake essentially changes the way mining is done. It's no longer mining, it's start staking. Mining is very energy intensive. You have to spend a lot of electricity to power up warehouses, cooling system, your servers and your mining rigs and so on to mine Bitcoins. Proof of stake essentially says that if you have 10% of all coins in the market, in the circulation, you will get 10% of all the transaction fees that is circulated. And that's how the network is secure. Peercoin was one of the first coins to innovate on this thing. There's a lot of coins that innovate with different use cases. Prime Coin basically use mining to try to find prime numbers. So instead of putting the mining work to waste, they use the mining work to find the prime numbers. A lot of experiment with different code bases. So a lot of developers just took Bitcoin's code and just rehashed them. So some guys decide to write a blockchain from ground up in Java and so on. At this point in time, I think 2014 or so, there was a lot of experiments on national cryptocurrencies. So we have the big one, Aurora Coin from Iceland, which is basically a group of guys from Iceland who said that if you're an Icelandic citizen, you can verify your identity online. We're going to give you like some amount of Aurora Coin. for free. You essentially get free money. So you just have to verify that you are an Icelandic citizen. And there's a lot of other coins for national cryptocurrencies as well. There was Crypto Escudo for Spain, Scot Coin for Scotland, E-Gulden for Netherlands, Peseta Coin also for Spain, and there's a bunch of other stuff. But what I can say is that none of this took off because it was not done from the top up. It was not done by governments, but it was done by a group of guys who say like, hey, I'm going to launch a coin for Malaysia. Why don't you, if you are a Malaysian, you can verify my card. I'm going to give you like some Boleh coin, for example. So this didn't take off. But central banks, some of the central banks are looking into this to see if they can actually implement a national cryptocurrency, but everything's a POC, a proof of concept at this point in time, nothing solid at this point in time. As I mentioned, anonymous cryptocurrencies, a lot of guys are looking into it, and this was pretty interesting, Dogecoin. So Dogecoin, Doge is this internet meme, it's like a Shiba Inu dog. It's like this cute looking dog online, and some guy somewhere in the world just tweeted out, wouldn't it be cool to have a Dogecoin in the market? And then some guy in the other part of the world like say, that's a good idea, let me work on it now. And then he released a source code, and bam, it became like a sensation overnight. It was mainly used for tipping. It was very popular on Reddit, on Twitter, so you could send microtransactions. So I can send, if you say something really witty or funny on Reddit, I can say, give you 10 Dogecoin, and it automatically sends to your wallet. So one of the big innovation that came out from all these cryptocurrency, alternative cryptocurrencies was Ethereum. So if you can think about Bitcoin as a peer-to-peer electronic cash payment system which facilitates payment, you can think of Ethereum as like running code of decentralized applications because it's essentially a decentralized platform. Both Bitcoin and Ethereum uses the general ledger which stores data on the blockchain. But instead of just storing data on a blockchain, Ethereum takes it one step further by running code on the blockchain. So it has this thing called smart contract, which essentially is just small computer programs which are replicated on every single node in the Ethereum network. And then you can run basic code on it. It's called smart contract because you can execute code without the need for a central party. So you can say like set conditions under which a person can be paid a certain amount of dollars. So I can say like set condition, pay Alice 5 Ether at if this condition is met. And if this condition is met at a certain point in time in the future, the money can automatically go to Alice without any central party making any decisions. So that's what comes out of Ether from it. So it's quite a mess in the space. There's 1,000 over cryptocurrencies in the market, and there's always a question, how do you classify all these cryptocurrencies because there's all these things going around in the market. So one way to think about it is via this diagram I found from CoinDesk. So this is all the public blockchains in this world. Okay, caveat, there's public blockchains and there's permission blockchains, private blockchains. In this talk, I'm only talking about public blockchains. So yeah, so there are all the public blockchains in this space. So you can classify them as cryptocurrencies such as Litecoin, Monero, Litecoin, Bitcoin, Stellar, which basically facilitates payments and all as its main objective. And there's a bunch of privacy-focused cryptocurrencies such as Monero, Zcash, Dash, and so on. There's these decentralized application platforms such as Ethereum, Liz, Ethereum Classic, Neo, Waves, Quantum, and so on. And under all these decentralized applications, you can run smart contracts or decentralized applications on top of it. So Ethereum is not the only platform where you can run smart contracts. And on the other extremes are like decentralized exchanges such as 0x and Swap and interoperability of blockchains. So at this point in time, blockchains don't talk to each other. So if you have Litecoin, you can't communicate with Bitcoin or Stellar or Monero or whatever. So there are groups of guys out there who are trying to work on having blockchains talk to each other. So under decentralized application, there's a bunch of other things going on. There's a group of guys working on prediction markets such as Augur, Gnosis. So prediction markets are basically, you basically predict what the future is. But instead of just predicting where I can say, I think somebody is going to win an election. you put money behind it so that the prediction becomes more solid. So for example, in a run-up to the US election, there was Hillary versus Trump, right? So people say like Hillary might win, Trump might win, but you could take a look at the statistic. It's like a prediction market where you can say, if you think Trump is going to win, put your money where you say it is. So if a lot of people put money saying Trump will win, then despite what the media says that Hillary is going to win, the prediction market is saying that more people are putting their money that's saying that Trump will win the election. It's still a POC at this point in time, but we will see a lot of innovations going on in that space. There's a group of guys working on games on the blockchain, storage such as Storage, Coin, and Filecoin. So essentially what the storage does is you can store data on the blockchain. And there's asset management for Economy and Melon. This is just a very small subset of all the other tokens that are out there in the market. So cryptocurrency market cap has gone up to roughly $130 billion or so. It was barely anything like a few years ago. If you can see, it only went up really high. Is this a bubble? I don't know, but if you think of it, be very careful if you're thinking of going in at this time. I'm not so sure if you can see this. Is this clear from the back? This is a research report which we are going to publish today. Basically, CoinGecko is publishing a Q3 cryptocurrency trends analysis of all those cryptos, and we prepared a chart from January 2017 to today. This is the year-to-date top 10 cryptocurrencies price growth. Some of the cryptocurrencies have gone up massively in price, such as Ether, Ripple, NAM, and it's gone up by like 3,000% or so, 3,000 to 4,000%. And one of the trends, the big trends that happened in 2017 is basically the Bitcoin Dominance Index. Bitcoin, as the first cryptocurrency in the market, used to command like a huge network effect. It used to be the reserve currency of all cryptocurrencies, so like 90% of all market capitalization, all money in the crypto space is parked in Bitcoin. This was true up till 2017. This is not very clear, but 90% of all money in crypto was in Bitcoin, this orange line. It was only recently in 2017 that we start seeing Ether and all, Ether, Ripple, NAM and all taking up this Bitcoin Dominance Index. So at this point in time, Ethereum has about 20% of all money in the crypto space. Bitcoin Cash has 5%, Litecoin 2%, Ripple 5%, and so on. At the lowest point, Bitcoin was about 36% of all cryptocurrencies. The reason for this can partly explain due to the slow development process of Bitcoin. Development has more or less stalled for Bitcoin. There was not much development, and the other cryptocurrencies are more agile and they can innovate faster, and a lot of the money has moved on to the other cryptocurrencies. But that being said, it's still a major player in the space. But it was the reserve currency. It's no longer the case for 2017. That's one of the trends that we observed this year. Initial coin offering, ICO. So I'm sure a lot of you have heard about ICOs as well, people making insane amount of money and all. All right, so what is ICO? ICO is basically an unregulated way of fundraising similar to how IPOs, initial public offerings, are conducted. So in IPOs, companies that are established, have revenue, will take a bunch of their shares, say 60% of their shares, and sell it to people, sell it to investors. So before they do it, they have a prospectus, and the investment bankers will sell the shares first to retail institutional investors before going to the retail investors. And once that is done, the shares are then listed on the stock exchange. So ICO is very similar, and that's how cryptocurrency projects are usually funded. So cryptocurrency founder can say, look, I'm going to create 1 billion of my tokens, and I'm going to sell like 60% of these tokens to investors. And no one's going to buy your tokens with just a website, without anything, right? So what they do is they publish a white paper, which is very similar to a prospectus, put it out to the market, put a very nice website, and then start selling it. And before they do a sale to the retail guys, they always sell it to the whales, like those guys rich in cryptocurrencies. So, and they call this a pre-sale. and they give some discounts, just like how investment bank gives discount to institutional investors. So they do a pre-sale, raise some money, and do more public roadshows to sell to retail guys. And once these sales are finished, these tokens are then listed on cryptocurrency exchanges. And once it's listed on exchanges, there are buyers, there are sellers, and there's demand and supply. Price discovery takes place, and then that's how the market cap is shown for all these coins. Most ICOs are created on top of the Ethereum platform. So you basically create tokens on top of Ethereum. This is basically the decentralized applications on top of Ethereum. And it's created on top of using the ERC20 standard. That being said, it's not the only way. You can create your tokens on Waves, on Quantum, on NAM, and so on. And you can also create your own blockchain by itself. So most of the ICOs these days require you to pay in Bitcoin or Ether. Mainly Ether at the early start of the time, but now they accept Bitcoin as well. And that was one of the reasons why Ether price went up 3,000% this year, because of this ICO boom. Ethereum just makes it really simple to launch your own tokens and create an ICO. And one of the trends that we saw this year is that blockchain token sales from ICO has far outstripped cryptocurrency VC deals. So if you're a cryptocurrency company, you are faced with two choices. Do you raise money from VC, from a traditional funding source, or do you do an ICO? And what we have seen this year is that most blockchain projects are funded via ICOs instead of VC. That's the trend that we saw. So CoinGecko maintains an ICO list, coingecko.com/ICO. You'll see like there are hundreds of ICOs in the market. This is just a screenshot. There are many, many, many out there that you can see from the website. This is a trend of monthly new ICO funding. If you can see, there wasn't any funding in the early stage. Ethereum was actually one of the first guys that did an ICO very well. So if you can see here, somewhere this August 2014, that's when Ethereum did its ICO. They raised $18 million back then. And you basically send Bitcoin to them, and they promise you to send you Ether at that point in time. Like, they only gave it close to 1 year later. But the boom only started getting crazy in 2017. There's this one huge spike here in May 2016, which is the ICO for this token on top of the Ethereum platform called the DAO, which is the Decentralized Autonomous Organization. I will touch on that later on when we talk about Ethereum split. But you can see, it was only this year that ICO started going crazy, and this explained the rise of the Ethereum price. Year to date, from January to September 2017, ICOs have raised close to $1.5 billion US. That is insane amount of money. Some of the notable ICOs, Tezos raised $232 million, insane amount. Bancor, $153 million. The DAO, $152 million. They raised so much money, they became a systemic risk to Ethereum. Status, 95, 10x from Singapore, raised $83 million. Compare that to 2014 when Ethereum did its ICO. It only raised $18 million. This is a 10-fold increase. Don't ask me what they do. They have no project. They have no working prototype at all. They just come up with a project paper and say like, look guys, I'm doing ICO, I'm going to raise like X amount, like insane. Pretty much like crowdsourcing. Pretty much like crowdsourcing. Like say, look, this is my project. If you want to contribute, send Ether here. When it's ready, I'll give you back my token. No, we just collect data. We don't facilitate any of these things. A lot of these ICOs are illegal fundraising of securities disguised as tokens. The US makes use of this thing called the Hovey test to check if it's a securities. So basically, there's 4 conditions. Conditions are: is there an exchange of money, Bitcoins or an Ether out of form of money? The second condition is there an investment in a common enterprise? Is there an expectation of profit? And is the expectation of profit coming from the efforts of a third party? So if it fulfills all these 4 conditions, the Securities and Exchange Commission will classify this as a security, and we'll have to regulate them. That's why a lot of the ICOs these days actually exclude Americans from participating. Yeah, and a lot of these ICOs are coming from Russia, from China, from everywhere in the world. Yeah, I'll tell you more later on. They're blocked now, but previously, before they were blocked. Guys, there are a lot of scams in the market, in the ICO market. I do not recommend you participating in it if you do not yet own Bitcoin or Ethereum. You have to learn and, buy your Bitcoin or Ethereum first if you're interested. Buy a small amount. The most important thing is learn how to secure your coins. Because I mentioned earlier, coins are easily stolen. Once stolen, there's no way back you can get your coins. So before you even participate in all of these things, like make sure, don't even participate if you don't own Bitcoin yet or Ether. And because we are in Malaysia, I'm aware that there are a lot of MLM scams going around saying that they want to launch their own coin and all. I've seen too many people, I know people who put money into this. I've told them, don't put your money in this. This is most likely a scam. Obviously, not going to listen and put money because everybody wants to get rich quick, right? So if you're interested, please buy Bitcoin or Ethereum first. Learn. Only then, maybe, consider this. But this is sophisticated stuff. And that's why regulators will come in, because too many scams are going on in the market right now, raising too much money. I don't know what they're going to do with all this money as well. So ICOs we've all heard of tech companies becoming unicorns, right? Basically having a valuation of $1 billion. So the same has happened this year as well with ICO. So there are 2 ICOs that have hit the $1 billion valuation mark, which is Omisego, a Thailand-based payment company. They raised $25 million, fair, reasonable amount, and their tokens were 27 cents when they did an ICO, and it was about $11. This is a TechCrunch. And Qtum, which claims to be the Ethereum of China, raised $15 million and went from 30 cents to $17. Insane ROI. But yeah, these are some of the outliers in the ICO space. There are a lot of ICO guys who are scammy and who will not return your money, who run away with your money, and so on. Okay, so scalability issues. Bitcoin has a scalability issue. Not just Bitcoin. Cryptocurrencies in general have a scalability issues. Visa and Master can take up to 30 to 40,000 transactions per second. Bitcoin can only handle 7 transactions per second before the upgrade recently. So you'll see that Bitcoin has a scalability issue because there's a hard cap on the size of each block. Each block has a maximum size of 1 megabyte. This was implemented by Satoshi a few years ago to prevent spam transactions coming from spamming your network. But the community is divided on how we should scale Bitcoin. And there's basically 2 groups of guys who disagree on how we should increase this cap. This is 1 megabyte hard cap. How do we scale? There's a bunch of things. Segregated witness is one of the solutions. Basically, it removes some of the transactions from the block so that they can pack more transactions in the block. This is basically being tested out in the Litecoin. This is actually gone live in the Bitcoin network. This has gone live sometime in July or so. It's gone up. Everyone has agreed to upgrade to SegWit. Basically, in May 2017, there's a group of guys who agreed to implement segregated witness and to increase the block size to 2 megabyte. In November, we need to have a hard fork. All the miners, we have to agree to move from 1 megabyte to 2 megabyte. But we know that there's a group of guys who disagree with 2 megabyte, and then Bitcoin will most likely split again. So there's a group of guys who does not want segregated witness, and that's how Bitcoin Cash was born. Lightning Network is basically a way to have off-chain transactions. This is being tested in the Litecoin network at this point in time. If this works well, this may be ported to the Bitcoin network in the future. I don't think I have much time, so I'm going to skim through all these slides really quickly. Chain split. So you have heard Bitcoin and Bitcoin Cash. Basically, Bitcoin and Bitcoin Cash has the same history. They share the history up to this point in time. On the 1st of August, Bitcoin and Bitcoin Cash went their separate directions. Basically, there's 2 groups of people. One wants big blocks, and the other one does not want big blocks. So Bitcoin Cash does not want segregated witness implemented on the chain, and they want 8 megabytes on their block instead of 1 megabyte. So this group of guys say, look, I'm not going to agree with the way that you're going forward. I have mining power and mining support. I'm going to create my own chain called Bitcoin Cash. So essentially, this is basically ways how they want to disagreement on the future direction of how Bitcoin can scale. And that's why they split. This talk of scaling Bitcoin has been going around. It's a political debate that has been going around for the past 2 years. Basically, in year 27, around August or so, basically this thing came about, and they say like, look, the community decided that it's best we part ways and on how we can grow the Bitcoin. This is the same for Ethereum. I mentioned earlier the DAO did an ICO in August 2016 or so and raised $160 million. This represents about 15% of all Ether tokens at that point in time. It's a systemic risk. So it's a smart contract, right? So once you write smart contracts and you deploy it, every single computer in the node runs a copy of it. The programmers did some checks, security checks and all, but when you run a decentralized code, you open yourself up to a lot more ways to be hacked, to be attacked. So the creators of the DAO miss out one small vulnerability, and with that vulnerability, a group of hackers managed to exploit it and drain $50 million worth of Ether from the contract. So the Ethereum Foundation was faced with a dilemma. Should they remove these stolen coins from the transactions, or should they keep it in the transactions in the network? The group of guys decided that, look, this is too much of a systemic risk. I'm going to remove it from this thing so that we can grow forward without this stolen coin, because otherwise there will always be a history of these stolen coins in the history of this network. There's a group of guys who believe that blockchains must be immutable, because what if the Ethereum Foundation removed this transaction from the blockchain? What's going to prevent the Ethereum Foundation from doing more of such things in the future? So there's a group of guys who does not agree with this and decided to just like split it, and they call themselves the Ethereum Classic, which contains all the stolen coins from the DAO attack. This does not contain the stolen coins from the DAO attack. Regulations. I think it's a bit small here. Basically, if you are in the crypto space, you are subjected to a lot of regulations. There's all this anti-money laundering, counter-financing terrorism, laws, know your customer regulations that you have to put in place. We are seeing different jurisdictions having different attitudes towards regulations. One of the big things that we have seen lately is New York has a bit license issue in August 2015 or so. Big thing that happened was in last month, in September, China did two major announcements. First was they banned all ICOs, which was a fair thing to do. And the second thing is they banned all crypto exchanges as well. So essentially, trading has stopped in China, and trading can only continue via OTC trades at this point in time. But that being said, a lot of people in the cryptocurrency community believes that this is a temporary solution, temporary measure. It's a stopgap measure before regulations are introduced in China, where exchanges are regulated and put in place. Malaysia, Bank Negara is working on a cryptocurrency guideline, and I think they will release a guideline at the end of the year. So yes, at this point in time, there's nothing solid at this point in time. One of the most progressive regulators in the world is actually Japan. So on the 29th of September, Japan announced that they gave out 11 Bitcoin exchanges licenses. So there are 11 platforms in Japan that can legally buy and sell Bitcoins in the Japanese market. And the Japanese regulators are very progressive because of the Mt. Gox issue in 2014. So Mt. Gox was based in Japan, and they went bankrupt, and there's all these people who had Bitcoin who lost their Bitcoin. And then this company had to go through the legal system, the court system in Japan. And the regulators had a lot of time to study Bitcoin from 2014 until today. And that's why in 2017 they came out with the world's most progressive regulation and have regulated Bitcoin exchanges there. So yeah, opportunities. What can we do if you are interested in the crypto space? I would say there are a lot of opportunities. There are a lot of things that are happening in the space. It's a decentralized, there's value transfer from Bitcoin, Litecoin, etc. There's a bunch of guys working on storage systems, Storage, Midsafe, Siacoin. A bunch of guys working on identity management systems. How do you manage your identities on a blockchain? So for example, if you want to apply for a bank account, instead of passing everything to the bank, a photocopy of your IC and all, we could have a decentralized identity management system where the banks call on this identity management system to check and only request the information that they require from you, and you approve on them. There's a bunch of platforms like Quantum, NAM, Ethereum. There's this enterprise blockchain, private blockchains here. There are three major players at this point in time: L3, Hyperledger and Ethereum Enterprise Alliance. If you're interested, you can go and read more about it later on. And so yeah, if you're interested, learn, and learn. Please learn. There's a lot of scams. Too many people out there trying to cheat your money, trying to steal your money. Too many websites that look like there are too many fake websites that look like the real website trying to steal your money. These are called phishing attacks. You can trade these coins, build apps for the blockchain space. So if you're a developer, any developers right here, if you're interested, developer, yeah? If you're interested in building things in the blockchain space, drop me a line. We're interested in getting people to work on block explorers and so on. So research, you can write articles, can contribute to the community by weeding out scams. So yeah, there's a bunch of stuff out there that you can do. I think that's about it. So close to 1 hour. Yeah, thank you very much.
All right, we're going to open up the floor for a Q&A session. We're going to take about 3 questions max. Okay, we've got a question here first.
Hi. So now in the market, there are like many different tokens and coins for different reasons. For Ethereum, you need the Ether to execute the smart contract, and then for NAM, there's gas. So I just want to know what's your future take, because like for me, it's very unlikely like in the future for 5 years, like one person will need to use so many different tokens or coins to execute all these different functions. So what do you think about this? Will this like all merge, combine like into one coin, or that will still continue like using all these different tokens or coins for different functions?
I think in the future, we will not, if you say there's only 1,000 tokens, cryptocurrencies right now, I think in the future, somebody mentioned 10,000 and 100,000, I think that's where we'll get in the future. There'll be a lot more tokens. What we'll most likely see is that instead of users doing a lot of this thing from the front, I think a lot of this functionality will go to the back end. So you may be doing something that utilizes tokens on the back end. So you might do something on your phone, but without realizing that there are tokens moving behind the scenes. So developers have work on the tokens moving at the back end. I think what's going to happen is that there will be 1 or 2 major platforms that will take up a lot of things just to have a network effect. Who are they? We are not so sure yet. There's Ethereum, NAM, Waves, Quantum, a bunch of guys fighting to be this main platform. Not so sure, but it could also be the case that there won't be one major player out there in the market because of the interoperability of blockchains that people are working on. It could be the case that different blockchains can start talking to each other. So then it doesn't really matter if you have one major blockchain or you can have many major blockchains out there in the market. The market is very dynamic. Things change very quickly. It's kind of hard to say what's going to happen like 10 years from now, but if I have to give a prediction, that's probably what it will be.
Okay, I have like 2 questions. So for example, if you are a layman, so in order to like, if you want to evolve a system, so you need to make sure that a normal person can basically come and invest even in trade. So how do you think like what systems are over there which can basically do this? Like right now, we all belongs to tech actually, so we understand all the complexity and algorithms over here. But what about like, if you really want something to grow, then there needs to be something for like, you don't need to basically look into those algos, just go and trade.
So you're asking how to buy?
How to buy.
Okay, next question.
Next question is, okay, wait. Okay, so what causes these currencies to go up and down? So they were like, you have Bitcoin, Bitcoin Cash, Ethereum, and many more. Like how these changes are happening and how we can keep a track of them.
All right, so 2 questions, how to buy cryptocurrencies, and second thing is why price goes up and down. So I think I'll answer the second question first, why it goes up and down. Prices go up and down due to demand and supply. If there's supply, if a lot of people are trying to buy a coin, it goes up. A lot of people selling it, the price goes down, right?
I mean, how is the price coming down? So you're saying it's just based on
demand and supply. Yes, it's a lot of sentiment, a lot of speculation, a lot of sentiment.
Okay, so it's basically China blocks.
Yes, so China blocked Bitcoin, everyone started getting scared and sell, and price went down from $5,000 to $3,000. Very much like a stock market, and it's very sentiment-based, very sentiment-based at this point in time. Good news come out, price goes up. Actually, not much these days. Good news doesn't really impact the price a lot these days, but bad news impact the price very massively. it used to be the case that every time China make an announcement, the price goes down. At one point, there wasn't any more impact from China anymore, but this thing that they banned ICO and exchanges made a big impact. But as you can see, price went from $5,000 to $3,000 and it's now back up to $4,300. So the market is saying like, it's still going up, I don't care. I don't know why as well. It's sentiment. On the other question, how to buy Bitcoin. In Malaysia, you can buy Bitcoin from luno.com and coinhako.com. Hako, H-A-K-O. Coinhako.com. So CoinHako is an exchange and Luno is an exchange and CoinHako is a broker. So Luno maintains an order book in Malaysia. There are buyers and sellers in Malaysia. CoinHako sources the liquidity from overseas, from some of the exchanges and just sells it in Malaysia. These are exchanges and brokerage. You can also buy it from local Bitcoins, which basically are peer-to-peer transactions. So I have Bitcoin, you have money, we can trade online or in person. But you have to be careful with that. There are a lot of scams and well. A lot of guys trying to sell on Telegram groups as well, so be very, very careful. I would recommend Luno or CoinHako. And how do you trade all these other cryptocurrencies, right? So cryptocurrencies, you can trade them from cryptocurrency exchanges. So one of the big ones are Poloniex, Bittrex. So you can buy Ether from CoinHako, you can buy Ether from Poloniex, Bittrex, Coin, Cryptos, CTEX, Cryptopia. One of the things that if you ever buy all these coins, do not store them on exchanges because exchanges can get hacked and they have always been hacked, and if they get hacked, you lose your coins. Download a wallet and store it safely. Sorry, I didn't have my deck on the basic 101. I have another deck on how do you store your coins and all. I recommend using a hardware wallet if you have 100 ringgit worth of Bitcoin. I don't care, just store it anywhere. But if you have like 10,000 ringgit worth, like you need to start worrying about security. So one of the best ways to secure your coin is to buy a hardware wallet called a Trezor, Trezor. It's $99 about 400, 500 ringgit. I highly recommend the Trezor. It's the easiest way to store your cryptocurrencies. You can use your hard drive. So if you download a wallet on a hard drive and it's not connected to the internet, you want to trade it, you can still send the coins to the exchange. You trade it, then you send it back to your wallet. Do not store your coins on the exchange because exchanges can get hacked and will always get hacked. The way to think about it is very simple. I'm in Malaysia right now. I want to go to Singapore next week. I need Singapore dollars there, right? I can't use ringgit. So I go to a money changer to change my Malaysia ringgit to Singapore dollar. Do you go to the money changer today and say, guys, I need 1,000 ringgit to change to Singapore dollars. I'm changing it now, but because I'm going to Singapore next week, you keep the money for me. 1 week later, before my flight, I come for you, take the money and fly. You don't do that, right? You go to the money changer, take it, change to Sing dollar, take it and go home, right? And store it safely. Same thing. You don't buy Ethereum, go to a money cryptocurrency exchange. Look, this is Bitcoin. I'm going to store here. Keep it for me. I hope you don't steal it from me. Store it safely. I come 3 months later and take my Ethereum from you. No, right? Same thing.
Okay, I think we have space for 2 more questions.
Hi, Bobby. My name is Sheng. How easy or difficult is it to do an ICO, and approximately how much does it cost?
Please contact your lawyer. Please contact your lawyer. It's a fundraising. You get subjected by security. If you do this wrong, you can end up in jail. So please contact your lawyer. Because these are security. These can be considered securities. Be careful.
Okay, regarding the Bitcoin, as you can see, the value and price is really high. I just want to ask, what can you use the Bitcoin for? Can you cash it out? The value is kind of high. Can you buy a house with it? What can you do with that Bitcoin?
Yeah, so Bitcoins are basically assets, right? So I can, like some guy from Kelantan, or I don't know, selling pisang goreng or something like that, accepts Bitcoin, right? So you can buy, if somebody accepts Bitcoin, say like, I gave a talk and say my talk costs like $1,000, for example. I can say, pay me like $1,000 in USD or ringgit, or just pay me in Bitcoin. And then I get paid in Bitcoin, right? So if I have Bitcoin, or maybe I want to buy like, say if you have a second-hand car, you have a Honda, for example, and you want to sell your car to me, I have Bitcoin. If you want to accept Bitcoin, I can send this to you. But it's denominated in ringgit, right? Yeah, you can. Use a cryptocurrency exchange. Yeah, yeah. So you can use like an exchange like luno.com. So you send your Bitcoin to Luno. Luno will, and then you sell it for ringgit and then transfer to your bank account. Yes, you can. Yes. So you can use an exchange like Luno or CoinHako.
All right, just one more question, and then we close.
Don't worry,
it down.
I'll be around here, so you can come
Okay.
over and ask me questions later on as well.
Hi, I see that you actually monitor many coins, right? So if you're in Malaysia, Ethereum and Bitcoin are getting more expensive. So if you want to cash in on this cryptocurrency, which cryptocurrency that you say that is still undervalued and have a good potential for investment?
All right. Okay, this is not financial advice. Please consult your financial advisor. But if you have to ask me, and I tell you, and if you talk to your financial advisor and all the caveats put in place, Bitcoin and Ethereum are at a very high price. If you buy now, I don't know if you can make money or not, but do your own risk. But if I have to do it again at this point in time, and this is what the advice that I tell a lot of people. First thing to do is determine your net wealth. Say, I don't know, if you have 100,000 ringgit, your net wealth, house, minus all your loans. Decide what percentage of your net wealth that you want in crypto. It can be 1%, can be 3%, can be 5%. Anything from 1 to 10% is fine. So let's say you're worth 100,000 ringgit and you want to put 10% of your net wealth in crypto. So that's 10,000 ringgit. Don't go out and buy 10,000 ringgit worth of Bitcoin today. Dollar cost average your entry in. So dollar cost average means you buy Bitcoin over a period of time. So you can say like 10,000 ringgit worth, buy 1,000 ringgit worth of Bitcoin every day on the first of the month, regardless of the price. So over 10 months, you get 10,000 ringgit worth of Bitcoin, and then you average out the price volatility over 10 months. And if you don't own any crypto at this point in time, first buy Bitcoin and then maybe Ether. And I would say put 90% of your holdings in Bitcoin and Ethereum at this point in time, and then 10% you can play around with the other crypto because it's very volatile. So yeah, determine your net wealth, put how many percent of your net wealth you want to buy in, dollar cost average your entry, put 90% of net wealth in Bitcoin and Ether, and then 10% to experiment on the others. But if you get into it, please make sure you know how to store your coins securely. Do not store it on the exchange. Buy a hardware wallet. If you buy 100 ringgit, I don't care. But yes, if you get 10,000 ringgit and above, please store it safely. The exchange can get hacked. You might have your username and password stolen. Because a lot of people use the same username and password, right? If it gets stolen, someone access it, you lose your coins forever. And there's no consumer protection, right? So once you lose it forever. So yeah, on what coins? Just buy Bitcoin, Ether, and then experiment on your own. Like, just go CoinGecko, look at the top 25 coins, like, understand the coin, understand where there's value, and then maybe buy a bit and experiment. Yeah, that's what I would say. Just Google. Yeah. You just read a lot, and then eventually you'll find out which is real and which is not real. Coindesk.com. Yeah, so CoinGecko.com to look at all the price. Go to CoinGecko.com to look at all the prices. Go to CoinDesk.com to read all the top news for the latest top news on the crypto space. CoinDesk, I recommend CoinDesk. Yep.
Okay. All right. So we're gonna close the session.
Thank you very
for
much.
all those who have questions and so forth, please feel free to meet him after. Just a short announcement. We're gonna have our lunch. Feel free to collect your food here, either downstairs or second floor. The next session would be in the auditorium. We're going to have a keynote by Christian Rangan, who's going to talk about a topic called "Is Malaysia Ready for the Future? How Entrepreneurship Can Accelerate National Transformation" at 3:10 p.m. Other than that, another round of applause, ladies and gentlemen.